Hello guys, today we are going to analyze the stock of Edelweiss Financial Services. So the services provided by Edelweiss includes NBFC, which are non-banking financial corporations, housing finance, mutual fund, alternative asset management, ARC, which is asset reconstruction, insurance business includes life insurance and general insurance, insurance broking and wealth management. And yes guys, Edelweiss is planning to demerge their business. They are planning to list this wealth management business as a separate entity in the near time. So the earnings across these businesses, we can see that NBFC and housing finance are in loss. Their earnings are in negative in QY FY22, whereas mutual fund and alternative asset management are earning negligible profit. Asset reconstruction has some good profit. Insurance broking is in break even, which means no profit, no loss. Wealth management also has some good earnings, while life insurance and general insurance are in loss. So some of the key points about the stock, that the company has a market cap of rupees 7,518 crores, so it is a small cap. When we look at the PE ratio of the stock, it is around 14, and when we compare it with the industry PE is around 21. The current price of the stock is rupees 80, but the book value of stock is rupees 70. So we can see here that book value is very close to current price. So generally we think that if the book value of the stock is close to current price or current price is less than the book value, then stock is undervalued. So this is quite truth, and here we can see that even the PE ratio of the stock is less than the sector PE. So we might think that stock is very undervalued and we should buy it. But generally there is a reason why the book value is so close to current price. Here we can see that debt to equity ratio is 4.32. So debt is 4 times than the equity. That is a huge debt burden. So this is one of the reason why current price and book value are so close. And there can be another reason also, like that the company is not earning enough profits in the past, or some bad decision has been taken from the management side against the interest of the shareholders. Stock has a dividend yield of 1.81%, which is decent. It has generated approx 2% returns in last 1 year. So just 2%, where other stocks have generated almost 50%. This stock has just generated 2% returns in the last 1 year. When we look at return on equity, we can see it is just 4.18 percentage, and return on capital employed is 10 percentage. So one thing that looking at these figures in isolation is just a half story. Return on capital employed looking individually at 10% may seem very low, but let us compare this ratio with other companies in the same industry. So here we can see that Bajaj Finance, SBI Cards, HDFC, AMC are the competitors of Edelweiss Financial Services in the finance and investment sector. So the PE ratio of the stock is comparatively less than these companies. Market cap is very less than these huge giants. Dividend yield for the stock is good and better than other companies in the sector. And when we see the change in quarterly profit, we can see that Edelweiss had a very good growth in the recent quarter. Sales were good, but the change in sales, the growth in sales was in negative, while for other companies it was mostly in positive except Bajaj Finserv. Now the return on capital employed ratio for Edelweiss it is around 10, and we can see for other companies also it is in similar percentage except the HDFC AMC, for which it is around 39, approx 40. In phase 2, they are planning to get regulatory approvals for EWM business. In phase 3, they are going to list it as a separate entity after the approval of NCLT. When we have a look at their shareholding pattern, we can see promoters have holding around 33%. Now 33% is not a very huge holding. Employee trust has 4.8%, domestic institution and non-institutional investors approx 25%. FII companies have 31% and management has 6%. When we have a look at their key shareholders, we can see that there are big names like Pabrai Investment Funds, even HDFC, AMC, LIC, Rakesh Jhunjhunwala, Vanguard Group, and many more. So yes, there are big names in the shareholding of these companies. So shareholding is in the strong hands. When we have a look at their total number of customers, we can see that their total number of customers grew in QY FY22 and they are growing in the past also. Even the customer assets are growing. Having a look at their business highlights, then in NBFC they have signed co-lending agreement with central bank. For housing finance they have partnered with private sector banks. In mutual funds their asset under management grew by 111%, which is very good growth. Alternative asset management, they are ranked number 3 in Asia in terms of AUM in the last 5 years. Asset reconstruction, they have acquired good amount of assets. In life insurance, their premium grew by 31% year on year. Their client base has increased by 10%. In general insurance, they have partnered with Mahindra Broking and Clear Trip. Wealth management assets grew by 32% and they have reached highest ever quarterly raise of $202 million. So let's discuss more about their demerger. Yes, demerger of Edelweiss Wealth Management. They are also going to reduce wholesale credit assets in the next 18 months and scale up asset management and insurance business. In the phase 1 PAG, which is the one of the largest Asia's independent investment group, have a strategic investment in Edelweiss Wealth Management business. Having a look at their financial position, we can see in short terms they have good amount of assets to cover all their liabilities. But the important point in long term, we see that assets are far less than their liabilities, whereas the situation should be opposite. For a good company, we always look that for in long term, assets should be far more than the liabilities, even if they are not having in short term. But here the situation is opposite, and these are negative signs for the financial position of the company. When we see at their debt to equity ratio in the recent quarter, their debt to equity ratios percentage have decreased. We can see that this debt red part is the debt portion and they have reduced this in the recent time. At one point their debt to equity ratio percentage was above 600%, but now they are reducing their debt, which is some positive news for the company, and currently it is around 372%. To summarize, guys, let's have a look at some of the positives and negative points about the company. So in positives, yes, company has reduced debt in the recent time, but still the amount of debt is large. Stock is trading at a book value of 1.14 times of the current price, and company's median sales growth has grown by approx 25% in the last 10 years. But the negative points, the company has low interest coverage ratio. Promoter holding is very low as we discussed. Even the return on equity for the company is in negative in the last 3 years. And earnings includes the other income, which is around rupees 1500 crores. So the whole earnings are not from their core business, they include the other income. So guys, personally, I would suggest you guys to wait for the listing of Edelweiss Wealth Management business, and then we can think of investing in that business. Now let's have a look at the chart of Edelweiss. So guys, this is the Edelweiss chart on a monthly time frame. One thing which we can see is this mountain structure. Now at one point stock made a high of 342 in 2018, but then company made some losses in the quarterly results, we can see, and then stock started declining. So one point here is that definitely if company is able to improve their debt position and is able to generate enough profits, and the target can be very high. On a daily time frame, we can see that stock has been consolidating in this range, which is between 83 and 76. Once it gave a breakout in the month of July and went till 100, but then after poor quarterly results, stock again came in this range. So if somebody is already invested in this stock, they can place an SL at the level of 60, which is a major support zone for this stock. So guys, this was all from this video. If you found the content helpful, then you can like the video and subscribe to this YouTube channel. Also, you can let me know in the comment section if I missed any important point about the company, or if you want me to cover any specific stock. Thank you.